What up, what up, what up? It's your favorite YouTuber's favorite YouTuber. That's right, y'all. It's your boy, the Options Boss, sliding up on y'all. I hope all is good. I hope you guys made some money for yourselves today. And I hope you guys are ready to study so we can be prepared to make some money the rest of this week. Now, with that being said, guys, I'm going to talk to you about a few things today. I'm going to talk to you about what levels the market is at currently. I'm going to talk to you about what we would like to see going forward. And I'm going to talk to you about if the stock market is going to have a correction. So with that being said, veterans of the channel, go down below, like the video, drop a comment. Every time you do, your support helps my channel grow. And for that, I appreciate you guys so much. Also, watch this video from beginning to end. When you watch this video from beginning to end, you're going to learn throughout the entire process. And the YouTube algorithm is going to love me. So for that, I'm going to love you.
Oh, yeah.
Newbies to the channel. If you're interested in the stock market, if you're interested in trading options, I'm your boy. I'm the Options Boss. I'm going to give you the game from A to Z and let you know how the thing go. So what you need to do is you need to go down below. You need to like the video, subscribe to the channel, and make sure you hit the notification bell and click all notifications. This way, when I drop these Get Money Jewels, YouTube is going to make sure you get it first things first, right off the press, so you can put these game plans and strategies right into play the very next day, as soon as the market opens. Now, that being said, guys, today was a crazy day. And really it's been a crazy 3-day stretch in the market. So Friday, we dumped down a whole lot with the whole potential coronavirus new variant being made known to the public. We dumped down a good bit on Friday. We came back Monday. We looked super bullish in the morning. Then we went all the way red, I believe, and we came back and finished green just by a tiny bit. And then we had today where we opened up green, went up a little bit more, and then we turned around and went deep red. Now, let me tell you guys, it's been a rough 3-day stretch to try to trade this stretch. And what I'm doing is I'm trading less and less right now because there's uncertainty. What I like to do is I like to try to trade with conviction. But when the market takes the conviction away from my plays, then you have to realize that cash is a position. It's a stereotypical thing to say, but it is a thing. Cash is a position. So I'm sitting on the sidelines. I'm not really making a lot of trades right now. I'm still in a few plays that got further out expirations. So I'm just going to take my time on them and see how they play out for now. But the big catch with the whole market is very simple. We're trading very weakly, and at the same time, you got bulls that want to buy. People want to buy. I've said this several times on this channel over the past few months. The market is to the point where the bulls really want to buy. However, they're not stepping up enough, and the market is trading weak because of it. So today, we opened up in the 460 area, which was pretty good considering where we were at, I believe. And we went up a bit, and then after we went up, what happened? The market dumped down. And as we were dumping down, what I was hoping for was first things first, I was hoping that we didn't lose 460. Then when we lost 460, I was in calls at this time. I started to, get rid of a few calls that I could have gotten rid of. But at the same time, I knew there was some support around 457. And I wasn't really too amped up to jump into puts because I knew what happened. I knew what happened the other day when we was, deep red and then on Friday, and then we was green on Monday to start. So I didn't want to hop into puts for that reason unless we broke 457. And then, lo and behold, fast forward through the day, we actually did break 457. But after we broke 457, we reclaimed it right back, went up to 459. And then after we went to 459, and let me stop. Guys, I'm talking to you about SPY. I talk about SPY a lot, but if you're new to this channel, I want you to understand, when I mention these numbers, 460, 459, 457, I'm talking about SPY. The reason why I'm talking about SPY is because SPY has 500 companies in it, ticker symbol SPY. It has 500 companies in it, so it controls a big portion of the market. Can the market do well without SPY doing well? Sure, but is it a common thing? No. So typically, SPY is the heartbeat of the market. Now, that being the case, like I said, SPY went, it lost the 457 area, and right as you think about getting into puts, it shot back up to 459. And at that point, a lesser experienced trader than myself might have saw the 459 and said, you know what, we're going to hop into some calls here because the market is reversing. But that wasn't a reversal, and I'm going to explain to you why that wasn't a reversal in a second. But that wasn't a reversal. So what happened? The market dumped back down, and we ended the day probably around that 456 area. So if you did jump into calls at that point, you would have been a little bit nervous with that dump down. So what I did was I made a few trades early in the day, and after that, I essentially just wrapped it up. Even in the paid options group chat, I let everybody know what the market was doing. I always try to communicate with the squad. And from there, I didn't do much else, simply because there was no conviction in the trades. And I didn't want to trade just because it was time to trade. So I lost my conviction in the trades today with the way that the market has been going the past few days. And I sat on the sideline, and I felt like that was the best decision to be made. Now, could you have scalped a few plays on the way down or on the way up, made a couple pennies? Absolutely. But what would you have been risking is the question that you have to ask yourself. And to me, the risk would have been greater than the gain because nothing was going to be a monumental mover once we lost the 450. Once we lost the 457, nothing. We could have possibly got a mover, but it reclaimed right back, which is why you didn't jump in there. And when you got the 459, if you would have bought calls there, you would have made a grave mistake because that was not a reversal area. For SPY to really have been reversing, we would have had to have seen at least, at minimum, 462.50 and possibly even 464 or 465. But at minimum, 462.50. So for me to have any aggression in the game right now, I need SPY below 457 or I need SPY above, at minimum, 462.50. And I'm going to make a video talking about the levels on SPY to look for the rest of this week, next couple days, whatever the case may be. The levels to look for on QQQ, the levels to look for on DIA, and the levels to look for on IWM. And I'm going to do that in Tier 3, which is my channel membership on YouTube. If you sign up to Tier 3, my channel membership, you're going to gain lots of information, lots of knowledge about the stock market, about how to read charts, about how to find support and resistance, about how to know what levels you can be aggressive at and what levels you can play passively. So right now I'm passive. The market is in an area where, I mean, we was up to 462 today and we was down to 455 today. That's not healthy to trade. And then we got back up to 459 and then we might have finished around 456. So when you're getting them swings like that, it's great for scalping. But if you want to, try to get a nice win out of something, which I like to get nice wins when I can. If you want to get a nice win out of something, you're hoping at that point. You're playing a hope game, and I don't want to play a hope game with my money. So I just sat on the sidelines. You could have scalped a few things, made 10, 20% here, 30% there, sure. But I'm a big game hunter. I like 50, I like 60, I like 80, I like 100%, I like 200%. So I knew I couldn't get that under the circumstances that the market is trading, so I did not trade. Now, with the market being as weak as it is, the question becomes, is there going to be a correction? And the answer is, there could be. There's one culprit that could make us have a correction, and there's only one. And that one culprit is going to be what's going to happen with the new variant of COVID that everyone's talking about. If that thing gets over to the U.S. and it's a monster, a correction is absolutely positively coming. And there's no way we're going to avoid that. However, if it's not as powerful, if it's not as strong, if it doesn't do damage or, in a best case scenario, if it never makes its way over here, then there won't be a correction. We're going to still continue in the area that we're in, or hopefully rally into the end of the year. The market does like to rally into the end of the year. We'll see if that happens this year. Like I said, that COVID variant is a big bad bugaboo in this whole thought process of what's going to happen. It's making it difficult to trade in the short term, and it's going to make it difficult to really project what's going to happen long term. The one thing I can say with certainty is, like I said, if it comes here, there's going to be a correction. And when there's a correction, you could go heavy on puts. And if you don't want to go heavy on puts, you could definitely sit on the sideline. But you don't want to be in calls at that point. You definitely don't want to be heavy in calls because not a lot of things are going to be moving in an upward direction if we are going to have a full-fledged correction. So we have to look out for that. We have to be prepared for that. Minus the correction, we really need to get some more strength in this market. There was talk about inflation today with Fed Chair Powell mentioning that inflation could be a concern if this, again, this new variant of COVID, if this is kicking things up a notch, that inflation could be even more of a concern than what it already is. And if you pay attention to the market news, you know inflation has already been a big concern. So to make it an even bigger concern, it's a lot to take in. It's a lot to swallow for the bulls. And that's why today was not a strong day. That's why yesterday, even though it started out big green, was not a strong day. Futures right now, as I'm making this video, futures is really looking nice. However, I'm not buying it because futures 2 nights ago looked really, really nice. And then we got the pullback that we got. So it very well could happen again. You definitely want to be prepared just in case tomorrow's a bull trap if it opens up how futures is now. I know I'll be prepared. I definitely won't be jumping into much. And like I said, you got to know the levels to look for. Get yourself in tier 3 and learn the levels. Learn why SPY is important. Learn why QQQ is important. Learn why IWM is important. And learn why D is important. Those 4 really can help you shape your strategy on a given day if you day trading like we like to day trade. So that being said, guys, definitely study, definitely lock in, definitely don't be overly aggressive because now is not the time for over aggressiveness. Now is not the time for aggressiveness at all. You get in where you fit in, if you fit in, and if you don't, you stay on the sidelines. And that will be your strategy until you see SPY at minimum get the 462.50. Guys, you can always be a boss with the options boss. You already know I'm a holler when I holler.